Okay, so a quick recap on the markets. I'll also go through interest rates as well as commodities, actually, because I covered the dollar and gold and silver in a prior video just now. So need to be very quick. I have very slow internet and poor equipment here on holiday. Let's look at the S&P. So close at low of day on Friday. Look, next week we have a lot of data. We have a lot of earnings. We have FOMC. So almost doesn't matter what happens short term, Monday, Tuesday, even Wednesday, pre-market, at least FOMC, because FOMC should change things. And to be honest, we have so much data coming out, some of it pretty big stuff also besides the FOMC that they will move markets also. So technicals, I'm not sure how much they will count next week, but they are still valuable. So S&P closed at low day. For me, I'm just going to point out where I see support and resistance. At least I'm going to point out support. S&P, for me, there's only one real support level short term, and that's this area here, 444. You have this horizontal breakout zone. You also have the ascending coming up. If we start to close, not necessarily close, but just venture below the ascending, especially close below it, then maybe a pit stop at 437-ish before ultimately testing this horizontal 430. It's a nice round number. It was also resistance on the way up several times, including more recently here in early June. So for me, you've got this 444 zone. Then you have a pit stop down here if we start to breach below, but this is a pit stop onto 430. And remember that at that point, you'll be testing most likely this ascending. Okay, that's why I leave some of these trend lines in, because they may be relevant later. So yeah, and then we'll see after that. I'll probably be making another video before we start breaching below. But that's what I see on the way down. On the way up, I mean, I should cover it. I usually don't, because I always think it's a market top, but every time I say that, we seem to venture higher. For me, you've got this sort of zone here. I would say 460 normally, keep it nice and simple, but it's probably 462. Let's see. I mean, yeah, it's definitely possible. 462 on the way up, and after that, it's really probably 472, 473, this zone here, before ultimately 480. So it's almost these perfect 10-unit increments that happens to a lot of these markets. I'll just leave this one. I really am pretty confident we're going to move lower. So anyway, that will be the S&P. Nasdaq, very similar looking chart, very similar resistance and support. Actually, you can see straight away you got this resistance here that was almost touched. I didn't draw that one in. Again, a nice round number, 390 on the way up. So yeah, resistance on the way up. Let's just cover that now. 390, and quite simply 400 probably will be the resistance because it's such a big number, but we're almost at all-time highs, which is absolutely ridiculous, but it is what it is. So that's on the way up, 390, 400 on the way down. Well, normally I would say this is sending support, which corresponds with the horizontal, but we're so close to it. We close at low of day, and I think we will venture lower. That I don't think it'll be sort of intraday Monday support, maybe, but as soon as we close below that, we're really going to be touching this 358, let's say, level here. So 1, 2, and then if we go lower, you got the horizontal, and then this ascending coming in. I don't think we'll be going all the way down here before FOMC, but these lines should really cover it. So take a little screenshot or pause the video if you're really interested. What I think is support on the way down for the Nasdaq. If we look at the Dow Jones, that was weaker for a long time, but look at this late pop and outperformance. Resistance on the way up for me was this 35,500 zone, these little peaks over here. Never really got there, but other markets were reversing, so the Dow Jones does get influenced. But it was pretty strong last week. I mean, it was green several days when pretty much every day really. But it was green on many days where the other markets were red. So a late green sprout from the Dow Jones finally breaking this resistance. But on the way up, still got this 35,500 to close above. I don't know if we pit stop here at 35,800. Probably not. If we're going higher, it's probably all the markets going higher. But yeah, you got this 36,500-ish zone, and then the absolute high of 37,000. Crazy that I'm talking about all-time highs. But those are the levels. I don't think there's much point in. But I have had to be humbled before on this relentless rise. So let me just put them in. This one, I'll put it in, but I don't really believe in it. It's probably a pit stop intraday. And then the all-time high, I'm not going to put that on the way down. This breakout, of course, that will be support, 34,000, let's call it 600. And if we go lower, then it'll probably be this horizontal, which will coincide with this ascending. So it'll be this ascending at that point, right? Come all the way back down, let's say 34,000 probably. No, 33,750 if you include the time element. So that's the Dow Jones. If we look at the Russell, I don't want to go too much into the next levels lower and lower because I make videos almost every day, even on holiday with this weak setup I have. Look at the Russell, straight away you can see how weak it is compared to the Dow Jones. Although the Russell, also like the Dow Jones, was outperforming on several days last week. Now it's run into resistance. They all did around this area on let's say Thursday, Friday-ish. So for me, it wants to come back down to 190. That's the next support zone. If we go lower, you know, the low of these areas, 1, 2, probably another higher low, and it probably will find support with this ascending. So I'd say, you know, if you add the time element of 182 on the way up, it's got to really take out this horizontal for me. So, and 200, look at that clear number. So maybe 199 is resistance just before, but 200/202, that should be a bit of resistance there. And then you can start to climb. What is it? 210-ish zone, this area. I'm just going to do a bit of an average between the two areas that I see as resistance, just to make sure, get a rough impression. You know, so once we close this area, maybe also this one here, little mini areas of resistance on the way up. But this one is far from its all-time high, if I can say far from, at least compared to the others. So I think that's the banking sectors primarily weighing it down. Let's look at the banks. The XLF, the senior ETF, for me, it's run into resistance. Now, it did go higher than I thought it would. I thought it would fail just before, but yeah, you could say that it technically closed above, at least my downtrend line. I don't know how accurate it is, but for me, that's not a breakout at all. You've got to give it some leeway. And also, look at this last day. It opened higher than the Thursday and closed within the descending. So for me, this descending line is still resistance. Still got to close above, let's say 35.5 for it to be pretty clear that it's closed beyond it. But then otherwise, after that, you still got to clear, let's say, this 36 little top here, and then ultimately 37. I don't see the banks doing that. You know, interest rates are going up, and that causes a lot of issues for a lot of banks, small, regional, and maybe even senior banks. So for me, we're at resistance. The next one is here, and I'm not going to go and draw in lines higher because I really am adamant that it won't breach any further levels beyond 37 if it even gets there. On the way down, this ascending, it's probably going to hit, if it goes immediately down, around 34, just above 34. If we keep going below that, then probably this 32-ish zone. If I add the horizontal, this last drop, but to be honest, if you add a time element, if it even gets there, it's probably going to start coinciding with this ascending. So I would say around this area, and then after that, it's probably a serious action going on in certain banks, and it's probably very bearish by then. I mean, obviously it will bounce if it does get down here, but there's probably some serious matter at hand. So I will probably have done another video by then. The regional banks, they've been extremely weak for months. They finally did a late breakout, a bit like the Dow Jones and even the Russell. But I just feel like it's a little too late because the other markets, S&P, Nasdaq, they've just done so much of a run. And obviously we've got FOMC coming up. I do think they'll raise by 25 basis points. I don't know why banks can rally. You know, you used to have this idea, oh, the banks earn more because rates go up. No, the banks are really exposed. So on the way up, look, I'm going to keep the resistance lines I've got in. Price support, boom, boom, here, 42.5-ish / 44. This tram line here, around there, I expect resistance. And on the way down, prior resistance, so 38, just above 38 here. If it goes low, I don't see any, maybe there's an ascending there somewhere, but I don't want to have too many lines. I want to keep, okay, I'll add it anyway, because it probably would come into, and also you got this gap fill, so maybe around there, 37. It'll take 2 or 3 days at least, maybe 5 or 6 if it does go down non-stop. 37, and then after that these horizontals come in. This one I can delete, it is non-void. Okay, that takes care of the KB, and to be honest, the KR is absolutely identical. So again, this prior resistance for the breakout, then you got this little halfway point, you can see why, right? It was support there, bam, hits it and then breaks out, tests it. So this horizontal does count. and of course I will add the ascending to be completely mirroring the last chart. So I think those are pretty clear, and on the way up we've got these same tram lines, and I just don't think we're going to make it. So that's the markets, that's the banks. Let's look at interest rates. The 1 year for me, ignore this tail. TradingView does that sometimes. I just think we're going to go sideways and up, and I do think the 25 basis point increase will just add to that thesis. So I think we just go sideways up. The 1 year is a bit special, but like the 3 and the 6 month, which I should cover, to be honest. The 2 year, you know, I'm not sure. I feel like maybe Monday, Tuesday, a bit of sideways action. Maybe Wednesday we go up. Maybe we go up to match the Fed a little bit. I am inclined to say we go up and test the old high, but you never know. So for me, resistance is the old high about here, just above 5%, between 5 and 5.1%. So regardless of what I think, the technicals are there. On the way down, clear support. It was resistance before, it's support now, 4.6. If we do go down and close below it, then we go down to here. This is also very, very clear resistance and therefore support. And lower than that, we probably got some serious crisis because everyone's buying bonds in fear, and then you got the old support of around 3.6. You know, so that's the 2 year. On the way up, by the way, there's no more resistance. It's just clear skies. I'd have to zoom out a lot more, and I'm not going to do that because it shouldn't really matter by then. The 5 year, also pretty clear stuff. This descending is now irrelevant. We broke out of that a while ago. So support on the way down. This horizontal, not too much between them, unlike the two. And if we keep going down, then really the absolute low, I don't know if this area here, maybe a pit stop here, if you see what I mean. You know, you could argue this kind of pit stop, but that's really probably worth scraping after this video. But there you go, those are levels. Otherwise, the absolute lows on the way up, which I think we will do if I had to guess. Then, of course, the old high, I'm going to say just above 4.3, maybe 4.4 actually. And then, of course, 4.5, the absolute high. So that's where I see for the 5 year, which is not the most relevant one. The 10 year, this is really the one. The descending, I should have deleted that already. So support is this horizontal. We bounced off it many times here. And then again, you know, if we breach below that, if we close below 6, below 3.7 at least, we will go low. And to be honest, I could add another trend line, you know. But I think keep it simple. I'll add it just because it's there, but all the way down here, 3.3. Again, a crisis is probably happening. This is the 10 year. This is probably the most important one, the 10 and the 2. On the way up, though, I can move that up to 4.1, not even 4%, actually, just 4.1. It probably won't do it in one day. And after that, you know, this 4.2, 4.3 zone. So watch out, 10 year. Let's see what happens. No point in guessing too much. It happens in 2-3 days. The 30 year, this one moves slower, but otherwise very similar chart. You have the support over here. Resistance, I probably need to recalibrate that. I don't see 4% really being resistance. We breached it already in the last peak and we're so close, and it wasn't too many days apart. So I would say 4% is not resistance. Be straight to 4.1 and we'll see what happens. The high of 4.4 on the way down, clear levels, multiple mini levels, but again, let's see. We'll be looking at other rates also by then. Normally I'd look at the dollar now, but I've looked at the dollar already. I'm going to look at commodities straight away. So copper, to be honest, the copper chart is kind of strong. It just depends on the dollar, you know. The dollar should roll over, although it can, you know, we're at 101 right now on the DXY, could go to 102. But if we go a little higher, I would expect copper to go back down, test this ascending, maybe even test a little lower, just below, you know, 3.69-ish, just do a little fake flush like it did over here. So who knows, we could go a little lower than this ascending if the dollar rises to 102. I don't think it will go higher than 102. But if the dollar does roll over, straight away close below 100, start to flush 99 and basically go to 97.8 on the DXY. You'll have to look at my other video for that. Then I see copper just breaching 3.95, going straight through 4 and going to 420. So copper, those are the levels I'm looking. The ascending, maybe just a little flush here. But otherwise 3.95 and 420. And after that, we'll see. Natural gas, I like. You know, this double fake flush. and then pierce this descending. For me, I don't care about interest rates, I don't care about the dollar, I don't care about the markets, I don't care about anything. I think natural gas is on its own little journey, and we're going to go up to 2.9, chill out here sideways, and then breach. Let's see if we can close above 3 one day on this descending breakout and basically go all the way up and start to go into this tram line gap zone. So for me, natural gas, still bullish, still expecting it to rise to $4, you know, so very happy with natural gas. Oil, very, very strong despite the dollar rally. I just feel like oil, just it's a bit like natural gas. Well, it is affected by the markets actually, and it is affected by the dollar, but I just feel like it wants to go to 80 or 82 ish zone. I mean, 80 is just a psychological resistance, but I think it would actually go to 81 to 82. You know, this thick line, which I should have made thinner, but yeah, 81 to 82 is where I think oil will go, and I think it's showing its strength, and it deserves it. You know, it withstood all of this ferocious negative technical selling, and the Saudis obviously helped with their production cuts and all that. But yeah, 81 to $82. Finally, uranium. Uranium is, well, it follows the markets. That's my opinion. So if the market drops, you could have uranium drop. But if you zoom out, keep it simple. You know, it's strong fundamentally, theoretically, geopolitically. There are lots of things going for it long term, and also technically here we broke out of this long term descending. We've had a bit of bouncing sideways. It just takes 1-2 strong days, and we, you know, as soon as you close above this 22 point, let's say 6 zone, you're looking at 24. And to be honest, once you're looking at 24, you're looking at 30s. So uranium looks bullish for me. If the market drops, or I don't know, the dollar goes up, whatever the reason, if uranium drops and it starts to go back down into this zone, into this triangle, this major triangle here, you know, which would probably require it to be below 21. And if it closes below 20.3, especially 20, but by then it's too obvious, then it's a failed breakout, obviously by then, which I do not expect, but I would very much welcome it, because then I could finally buy some. But I really would not be surprised if it just continues to break out. This is just sideways consolidation before the breakout. Okay, I can't go into gold, silver, miners. I've done another video, and to be honest, I regret not having covered the DXY here, because it's very relevant to commodities, so I'll try not to do that again. Look at my other video if you care about my US dollar short-term thesis. But I hope that was useful for the rest of the sectors that I didn't cover in my other video, gold, silver, and miners. Okay, hope that was useful.